Good evening to all of you. Welcome you to today's webinar. Today we are going to give a different perspective of how to trade this particular market, particularly when you have got a lot of gap opens, gap downs, and a lot of confusion. Because if you see the market opening lower and then the next the entire full day, it doesn't break the low. Similarly, it opens at a high level, and then it doesn't sustain, and then it falls. So these things we have seen. And in the first half an hour to 1 hour, you see huge amount of volatility. Particularly, the volatility is very huge in the first 15 to 30 minutes of trade, and after that, the volatility slightly subsides, and then probably you end up at some place in the afternoon. And what happens is that whatever close that is there, next day, if it is a bearish close, generally speaking, because the trend is down, next day we see some gap down, which is more common now. But in case of a bullish market, whenever there is a bullish close, next day we see normally a further bullishness in the market through a gap. So how to identify for intraday oversold position so that we can go for a buy. At the same time, how to look at the volatility and then take a call for positional trading also. And we are going to use some very simple techniques. So using the volatility, then the bar chart, probably a little bit of Fibonacci numbers or ratios also, so that we will try to highlight how you can look at the market so that you can practice, because we have already said that trading is an art. Okay. Now, certain things can be programmed, but certain things you have to refine and then understand, and then probably scale new heights in trading. Now, every time you look at it, you will get a different idea. So that's the beauty of this market. So there's nothing that you can say that I have learned it within this particular period and apply, because it is like trying to learn at every stage, make some improvisations, and make money in the market. But nevertheless, always consistency helps in the market. So whatever trading methodology that you have, if you have got a decent percentage of success, which could be 45 to 50%, but overall you're getting a very good return, then in that case you should stick to that particular plan and implement it consistently. So the problem comes only doing an inconsistent application. While we are trying to understand this, today the trading has become so complex that it's become very difficult to look at the market and do the trading by feeding you the price at which you want to buy or sell, or stop loss buy or sell. So that's how the market moves so fast, because within 10-15 minutes you see 100 points drop in Nifty. When such things happen, you definitely feel very difficult to trade in this market. So let us look at some way that we can understand the volatility, the bar chart, as well as Fibonacci, and see how best we can trade in this market. Okay. One is of course the positional trading. We'll come to it later. Now first the intraday trading. Now the VIX. So the VIX is nothing. You must have heard of the this particular one. That is the volatility. See, we have already talked about volatility while discussing about options. So volatility is a very important indicator, and in this we have seen this volatility is represented by what is called the average range. So average range, that is average true range they call it. So normally you measure the difference between the high and low, or between the close and high and close and low, and look at the difference, and then average it out to the last 10 days or 14 days. So that is the average true range. We have already had webinars on this. So right now I'm only looking at the application of this. Probably at some stage that we will look at the average true range on as a standalone tool. So average true range is an indicator which is available in most of the technical toolboxes. Now maybe you can use it by default 14 days or 10 days or time periods, whatever you call it. So that gives a sort of an indication of the volatility in the market. So if you look at the daily volatility, average true range, presently I'll go to the chart straight away to help you understand this. See, this is the chart in trading view, and we have the daily chart I'll put. So the daily chart, you can look at the average range now of the last 14 days. The average range is closer to 282 rupees. 282 rupees. So this gives an illustration that probably the high to low of the day can be 282, or between the close of yesterday and today's low, or close of yesterday and today's high can be 282 points. So 282 points, no, there's a chance that the market, or to approximately that particular range, plus or minus 20%, the market can trade 282 because it's the average. So if you see in the last so many months, the highest has been around 340 to 350 rupees. Okay, that is the average range. Okay, individual day range can be, because there's only average range. Individual day, sometimes it can be even 500 or 600 rupees. So let us not get into that notion. The average range is approximately, unless it's an extraordinary day, we should have some close to close, and 85% of the time we should have something like 270 to 280 points. Within that, the close to close should be there. That is what this represents. There will be always, suppose if you're trading 20 days, there will be always 3 days or 4 days when it can be out of this particular range. Okay, so right now, let us say 270 to 280 rupees. It just indicates plus or minus 20% of that, which means plus or minus 230 to 330 can be the close to close or high to low difference. Now what happens, now this can be corroborated easily. Now if you see this chart, you don't need to look at the VIX. Approximately it gives an idea. But in NSE, there is a VIX, which is a volatility indicator. What they do is that they take all the option prices. From the option prices, they derive what is the implied volatility, and based on a mathematical formula, they come out with what is called an indicator, which is called VIX. And that VIX is, gives an indication of the volatility. Whatever the average to range, it can be very closer to that. It will not be the same, but it can be very closer to that. Now, if you look at the VIX, if you go to the Google search and put the India VIX, right now, it's around 22.3. Okay, today it has traded closer to 22.3. So this is the indication of the VIX. That means, see, the 52 week high has been 33, and 52 low week has been 9 as far as VIX is concerned. So we will not go pretty into that 33 and 9 because these are all extreme levels. So on average, we are having a VIX which is around 22, 23 these days. Probably sometimes it sinks to 18 to 19. Now because the market is going down, normally when doing a bearish period, you always have the volatility spiking. So right now, it has come from 18 to 19, which was there a couple of days back, to around 22 to 23%. So this 22-23% approximately indicates around 240 rupees movement. Now we have illustrated through the average to range. We have mentioned as 280. So the average to range gives a slightly higher volatility, which could be 24 to 25%. But the VIX, it gives an indication of something like a 22%, which is approximately 240 rupees is what the VIX gives. So normally what happens is, whenever there is a trend, at least it has to break what I would say one particular day's range before we can call it as if some sort of a bottom made. So here if you look at the data right now, the low has been 16,143 and the VIX is around 280. Okay, 280 points. So either you can measure it from the close or from the average of high to low you can measure. So let us say high to low 16,403 142. It's 260 divided by 16,270. 16,270 plus 280, 16,550 or so is the normal place above which the one day range is broken. But if you take from the low, then in that case it's 16,142 plus 280, which is 16,420, and that is where the market has been stammering. Now if you see the last 2 days, the high is closer to 16,403, 404. So it needs at least a break of 16,403 for us to confirm that some sort of a bottom is made. So we need at least a movement which is above the average range of a day to confirm a bottom being made. Okay, because there could be always sideways motion. In order to ensure that we get something which is more than the average range, so we should to confirm that there is a bottom made. Now similarly, if it is a weekly chart, we should know at least on a weekly basis what is the average range of a particular week, and a confirmation of a weekly bottom at least will come if we get at least one week average range being broken. Now right now it's around 600 to 700 rupees or so. So if you look at that particular thing, 16,142 plus 600 to 700, so 16,742, 16,800. So we feel that no, the market will find it very difficult to break 16,800 or so, based on the weekly average to range. So right now, let us keep it like this simple. Now, what happens nowadays? Most of the time, there are gap ups, gap downs, at least on a close basis. If you see, that is, let's look at the 30 minutes. That is, even from the previous day close to today's open, there is a gap. So I think on almost all days, you are getting a gap either up or down. And now you see, so here there was the last few days I illustrate. This was a close. So here there was a close up. Here it is down, up. Okay, now up. Now here it is down, and here it is up, and here it is down, and here it is down. So except for today, we see almost the last 8 to 10 days, there is either a gap up or gap open, gap down compared to the previous close price. I'm only talking about compared to the previous day's close price. Now, first of all, there is always a frustration of a sideways market, because trending market you can always capture the market, but normally what happens is there is one trend and after that it is a sideways motion. So that means intraday traders have great difficulty, because if you are a position trader and if the trend is in your side and if luck is also on your side and the trend also follows the next day, then you are into a good amount of profit. Now what I mean by that is, say this day, let us say you are on the short side, next day you are definitely at a profit. Here you are on the short side, next day you are at a profit. So similarly here, you are on the short side and next day you have some profit. So if you are lucky enough, that is, you are with the trend in closing the position, in having the position trade, which you may be having because of your particular system indicating that you should be long or short. Then in that case, next day you make a profit, so you can say the trend was in your side. But what happens for the remaining part of the day? After 9:15, if you see, the market enters into a congestion mode. Most of the time it enters into a congestion mode. So most of the time, you see the intraday is more of a, I would say, sideways market, more of a sideways market than a trending market in an intraday. Now, first of all, in order to apply a particular system, first of all, you must know whether it is likely to be a trend day or it is going to be a sideways day. So that will first give you some glimpse of what you should do. Now, first let me say that you are, first of all, you should identify whether this day is likely to be a trend day or it's going to be a sideways day. So how do you identify that? Okay. Now, first of all, we have said that the average range, which represents a type of volatility, normally that particular range on a close to close basis, if it holds, then there is only it's an 85% of the time it will be within that. So when we say that average range is 280 rupees, on a close to close basis, we don't expect the next day's close to be more than 280 rupees from the previous day close, either on the downside or on the upside, at least for 85%. That is statistical measurement. So only that means out of 20 days, only 3 days or so it can be above it or below that particular range. Okay. So most of the time it will be within this. Now, if let us say on the open, compared to the previous day close, market already falls by 250 to 80, because normally we have seen these days gap down, right? So on a close basis, suddenly it just opens lower and opens lower by 250 to 270 points. That is what's happening now. That in that case, what do you do for the rest of the day? If you want to do, or probably those who are having position the previous day, what should they do? Whether they should also take the profit, wait for it to come higher and do that. Let's look at this. Now, we'll go to the chart back. See, this is a classic case. Now, the previous day close, this is a 30 minutes chart, 16,669, and next day open 16,440. So 229 rupees straight away. It is opening with a gap down, and we have said the 280 rupees is the likely on a close to close basis it's going to be. So probably let us say 229, maybe another 40-50 points it can go lower, and after that you feel there's only a 15% chance that the market is going to close below that. So how are you going to plan that? Now let us say if you see the next day, this day it has come down to 16,340 compared to the previous day of 16,669, and 340 represents something like a same 280, right? So 16,340 and 16,669. So it's around 320 rupees. So already it has now crossed the expected line, which is going to be something like a 270 to 280 points. That has been crossed. Now also you know that the previous day high is something like a it is something like 945, 16,945, and this has already come down to 16,343. There's 600 points. Normally one day and the next day high to low of the previous day with the next day, even if it is 280 rupees an average range, then in that case it can be 400 rupees or so. But 600 rupees already is a very whopping amount. So we expect some sort of a consolidation to happen, because now clearly the VIX amount, which is illustrates something like 240 rupees as per the present VIX, that sort of movement has already taken place on a close to close basis, and also we have seen based on the average 2 range also it has now taken place above that. So what you expect is that some 270 280 points should be the normal close. So you expect the close to be, so you make a measurement 16,669 minus 2,280, let us say. So you expect the close to be above 16,389. So that is your expectation. Now you can just wait for the market to see whether there is a further collapse here. So it comes to 16,343. So now it has breached below 16,389. So you expected the market to close above 16,389, right? So there is a chance of you to make a profit at least 47, 48 rupees or even more, because I'm only saying that it is expected to close above 16,389. It can be even much higher. So what do you do then in that case? So just wait for the patterns also. Now at this place you can use different types of methodology. One, you can we can look at the pivot points, R1, R2, S1, S2, those type of pivot points we can use, or we can use just a pattern also. So let us say here you got a 30 minutes pattern. Now since if it has fallen below the volatility level, which is 16,389 is what we have projected, so if it is closer to that or slightly below that, then in that case you wait for it to fall and then look at going above the 30 minutes high. You look to go above the 30 minutes high for a long trade for the intraday. That is, we are talking about for the intraday right now. Okay. Let us see whether we need to convert it into a position trade at the end of the day, depending on the movement that it gives. So 16,343. Okay. So here we are now going long above 16,403. And we are hoping that 16,389 and above it will close. So chances that the loss could be minimal of 14-15 points, and we are trying our leg, keeping that particular point of 16,343 as a stop loss. So we are taking a 60 point stop. In the present volatility, 60 points represents only less than 1/4 of the day's volatility. So this is what the stop loss is right now. So now on this particular day, it just from this it moves higher. And after crossing this particular high, then it moves a little higher and then closer at 16,438. So we have not made any loss. Okay. Now we are keeping this place as a stop loss. So we are not carrying the position. We have talked about as an intraday for the time being. Next day, now 16,438. Now 280 points. So 16,438 minus 280. 16,158. So we are expecting some sort of a bounce back to come from this particular level. Okay. So we are expecting the close to be slightly above 16,158 or more than that. So what we are doing is that we are waiting for the first 30 minutes to come to this level. It has reached 16,158. It has come to 16,142. Now question is that if you are going long, see the volatility is so high. The volatility here is very high. So we need to see the because if you go above this 30 minutes, then you are going long about 16,270. because we are having an expectation that it will be above 16,158. So there is a chance that if it above 16,270 means there could be a possibility of a loss. So we need to minimize our loss. Okay, so we need to look at some other way. So in that case, next 30 minutes is 16,270 again. So here if you see, it comes to 16,260 again, not worthwhile. Here if you see, so it is 16,237. So these places are not giving us a very good opportunity for us to go long, because the volatility of the first 30 minutes and subsequently has not been kind enough for us to go for a long, unless you are now placing yourself that at 16,142 it does come, and 16,158. So I will do a sort of a buy here itself, okay, and then put in a stop loss at 450-60 points lower than that, because the normal volatility on an average, if it is going to be 280 points, then probably another the highest that we have seen is 350 or 360 points. Okay, so maybe another 60-70 points if you don't want to risk beyond that. So you can take this volatility point and then put it another points on the higher side. That is, instead of 280 points, okay, then you can put 350 or 360 points. You can give another 50-60 points on the higher side. Okay, 50-60 points on the higher side, mainly because the highest that we have seen on an average to range has been 350-360 points, and the present volatility on a day-to-day basis is around 280. That's what it says. So we are willing to give another 20% on the higher side. So 280 means another 50-60 points. So we are just blindly buying at 16,160 or so, putting it a stop loss below 16,100 also. So that is the one way of doing this one. Otherwise, we can always look at what is the Fibonacci numbers now. So here we got a low here, so 16,340, and it went up to 16,142, which is around 200 points. So we can look at some ratios or some points to understand how we should do this. So now probably the previous let us say this high is 16,945. Okay, from that only it fell to 16,006. So it came closer to the 600 points. So 600 points into 0.235 is around 140 or 150 points, which is what is 16,180, 190. 0.386, okay, it will come to 233 points or so, which will be something like 16,110 or so. So you buy and then put in a stop loss at 16,110. 16,110, you can put in a stop loss. The reason is very simple. That is, this high to low, this important one from where there was a crash. Okay, this is 16,945, and this is 16,343, which is 600 approximately 600 points. So 600 points into 0.235, normally you will get 144. Okay, so 144, 16,343 minus, so below 16,200, 16,180, 190, and the next point comes to 233 or so, which means you will get 16,110 or so. So you can put in a stop loss below 16,110 and take this trade closer to this point and do that. So this is an idea which you can look towards. Now let us say this particular day. Now this particular day, compared to the previous day close, which is 17,111. So this open is 16,949. It's only 140, 150 points, right? So it's not that it has not happened. We are not in a position to, because there is a chance that could be another 100 points down from this particular level. So we cannot go long because it has not met the volatility, oversold conditions. Our oversold position comes only when the next day it has now fallen to a level which is equal to the average true range. Okay. Now in this particular case, it has not happened. So we need to be careful about it. We need to keep quiet. Okay. Now let us say now this particular day. Okay. Here also 17,201. Open is 17,077. So you got only 122, 123 points gone. Chance that it could be another 100 points down, right? So in that particular day, since there is a chance of another 100 points or so falling from the level which is 17,077, so another 100 points or so fall is possible, we can expect a trend either on the upside or a downside. So that particular day we can classify it as a possibility of a trend happening at least for some points. That is what we are trying to say. That is, if the volatility, you see, if the next day open is significantly, let us say, less than 50% of the ATR, of the average ATR range. Okay, that means if the average range is 280 points, if the next day open is 130 to 140 points, at least from that, from the previous close, there is a chance, decent chance, that there can be a trend on either side of some points which can help you to make profit. Okay, so that day you can look towards as a trending day and apply your trend following system. In this case, that's what we just now illustrated, that if it has already fallen to almost 100% of the average true range or approximate that, then in that case we have to now look towards a sideways market. Not much of a fall, probably it may gain, it may not gain also significantly, but chances that it could be a sideways, or it could be slightly in the upward side, because it has already come down to the lowest point. So from there what you expect is probably slightly in the upside, and probably at the end of the period it can also, end of the day, it can also move a little lower. So what you do is, in that particular case, you are positioning yourself for a long because of the oversold condition. So the oversold condition comes there when you have got the ATR range being taken, or it has moved equivalent to the VIX level. Okay, so here now then you put a stop loss, which could be, whatever the ATR, another 20% on the lower side you can put it. Okay, so now this is the let us say, so what happens if so today we have already this is yesterday's thing. Today what happened? Now see, this is today's open. Sorry, so today's open is 16,257, right? So yesterday's thing was 16,308. It's only 51 points. So very clearly there could be a good possibility of a significant move either on the upside or downside. So you would like to position yourself either on the upside or downside. Now first of all, at least you have to go for a trend. Okay, trends following system you have to go, because as per what we have calculated, it is within the range. So at some stage there probably you can have the trend picking up by the day. Okay, so then how do you where do you position, how do you position? That's the question. Now normally you can just probably look towards some sort of because the overall trend is down. So the overall trend is down. So we can always be looking at where we can go for a short position or where we can go for a long position. Okay. Now, if you see today, it opened, okay, at this place, and next day was an inside bar. Next day, 30 minutes inside bar, and this bar again, typically like the first 15 minutes or half an hour, you have the big range established already, 342, 16,352 and 16,243. So a very useless thing for us to look towards trading. Next day, of course, next bar, of course, you have the this one, that is the slightly better compressed, slightly compressed. Okay, so you got a 16,310. Okay, so you can at least look towards going long at 16,310 and keep 16,243 as a stop loss. 16,243 as a stop loss. Now it starts to move up. Now let us say it goes to this place, and then it now cuts a 30-minute low. So when it cuts the 30-minute low, then probably you can look towards exiting your position, or probably even reversing and going short, assuming you're not gone short, because you are following a dose system of higher lows and lower highs and lower top in order to go down on the short side. Then in that case, whatever that happened here, okay, whatever long that you took here, now that would have got cracked at this place. That is 16,308. So 16,000. So whatever you went long about 310. So the 308 you are exited with a small loss, and below 308 you can definitely go short, because there is a chance that you are expecting that yesterday's close was 16,308. Chances it could be much lower. Now 200 points lower also it can be. We do not know. We are not making, but it has a chance. So now since it has cut lower, there is a chance that you can have a significant move on the downside. So what you're doing is that you're going short below 308, and then it ended up at something like a 197 or so. So you have made a profit on this one. So the trend following system was used here using a 30 minutes bar chart. Okay. After identifying that today the significant movement on a close to close basis has not taken place already, which gives a decent chance for us to look towards going on the long side or the short side. Now similar thing you can look towards whether whatever that we illustrated in Nifty, we can illustrate it in Bank Nifty, we can illustrate it in any other type, whether it's commodity or US equities or currencies. Okay. Only thing is that the difference between commodities and the present equity indices that we have is we have definitely a gap up, a gap down possibility in case of equity indices and stocks, mainly because we are not having a continuous market. So that gives us a difference, compared to what we have this one in the case of commodities, where probably the chances there the volatility exceeding will be a little low, but there also you can follow the same thing. That is, it may not be gap up or gap down, but during the course of the day, if it had met its target, okay, then in that case, you can look towards going long in the commodities market also. So that also we will illustrate in coming weeks. Now we look at the Bank Nifty. See, Bank Nifty, the daily chart. So daily chart illustrates something like right now it's 766. So 766 is now the this one volatility in as far as the Bank Nifty is concerned. So normally, if you have 766 as a volatility, so the minimum thing that you can apply as far as the upward or downward movement is something like 205 to 10 points. We'll look at that right now. So let us say yesterday we look at the 30-minute chart. So yesterday this was the close, the previous day, 34,681. Okay, 33,927, which means it has already established, it has already got the volatility, right? So this is 681. Straight away it has got this amount. So in that particular point of time, you can take profits, right? You can definitely you can look towards taking profits of the previous day short position, and then look towards re-establishing the position during the course of the day. Now let us say, how do you do the intraday? Now you know that there's a good chance that this could bottom out. This could bottom out here. So right now what we are looking at is that some sort of a methodology to go on the long side. So now, having got this as a oversold condition, next bar that you're getting is an inside bar. Okay, so normally you should use the oversold, overbought condition plus an inside day will give you some sort of a benefit. So let us say this particular period, now you have the you can go long above this and keep this low itself as a stop loss. Probably you can keep this low, or probably keep this particular low as a stop loss. Okay, so this is one way you can look towards trading the market easily, and then probably on the rest of the day you made profits. So today, if you look at it, it did not the 230. So today what happened is it's likely to be a trend day. That's what we see, because yesterday's close was 34,321 and today it opened at 34,244. Not much of a difference. So what we are expecting is possibility of a 700 points movement, either from high to low or close to close, whatever it is. So let us say this particular place, we have an inside day, right? So after this, let us say you have an inside day, inside 30 minutes bar. So once you get an inside 30 minutes bar, after the first 30 minutes, then you are going long here. Okay, 34,356. You know the high to low can be 700 points here. So 34,176 plus 700, possibility up to 34,875 or so. It went up to 780 or so, 780 or so. So here you could have now gone long, because no, you know that there is a trend possibility today. So how do you work out the trend? So after the first opening, you got an inside bar. Now go either at the long side or go short below the inside bar. And here today we have gone long, keeping that particular low itself as a stop loss. So that is one way. Using the patterns, you can, having identified the oversold condition, you can decide. Otherwise, no, we have to look at normal, even as per the Dow theory. Now this is a higher bottom, this is a higher bottom. Okay, so this is an higher bottom, so you can go long about this. So that's another way of looking at it. Otherwise, we have to look at having got this oversold condition in the 30 minutes bar time, we have to look at whether it is able to cross a moving average. Okay, and last 20 bar, this one, whether it is able to move. Also, we can look at that particular way also to look at it. Otherwise, we have to look at last three. See here. Another thing is, see, if you don't get it, then this bar, this I broke the last 30 minutes I, which we have already illustrated last week. So we know that the once this I is broken, now this particular place itself can become a stop loss, because there will be last three bars low. So you can keep that as a stop loss and work towards on the upside. So you can get fantastic results by identifying the oversold, overbought condition. So let us say on this particular day, okay, this is the of course this is a close on this day, so we will leave it here. Now we have got a 35,317, and 700 points was not the open, it was only 400 points. So possibility that it can be another 300 points on the upside, it can go, or it can, when it reverses, then there will be a very big fall that can take place. Now we know that this trend is on the downside. So once the trend is on the downside, now we are looking towards a trending day, but we are going to put it below any 30 minutes low. We are going to put it below any 30 minutes low to trade it along with the trend. So here we got this place, we went short, okay, and we kept this as a stop loss, and then subsequently we saw the higher tops, sorry, this is the lower top, lower bottom all being made, and you got a decent amount of profits, right, going down up to this level. So the VIX enables you to understand whether the next day is an overbought or oversold condition. Similarly, when we look at the weekly chart also, we highlighted that probably for a week or so, it is let us say Nifty. What is the weekly one? So weekly is around 608 points, 600 points. So that means compared to the last week, we should have at the maximum 600 points, from where there can be a bounce back. Okay. So here also, if you see somewhere there will be a small difference, either 17,001 or 2. So 600 points is 16,500, right? 16,500 or so. Now the close was 16,400, and I told you 20% either side you have to give room for that. And here you got a 16,411. So which means this particular week it is not yet come to the oversold condition, because there is a chance that probably a 600 points. Now this particular week that is right now going on, because today is only Tuesday, right? It's only Tuesday. So we can normally expect something like at least a 600 points of high to low. 600 points of high to low can be expected here. And here we got much more, something like 800 points or so. So we can get something like 615 points. And we already said that there can be 20% on the up or down side. So here we got something like 700 to 800 points. So minimum that we will get is something like 600 points. So this week we got 600 points. So this week something like 500, 550, because this is average that we are speaking, and here this particular week we have almost 514 points. So we'll get something like 20% on either side. 610 when we mean it could be 480, 500 this side, or 720 or so on the upside. So at least now 500 points of up and down movement. Suppose if you say 16,404 is the high for this particular week, assuming if you're taking that as a week high, good chance that probably we may be heading towards at least 15,900 this week. 15,900 is a possibility. Okay, from there only the oversold condition can happen. Okay, for this particular week. And also on a close to close basis, if you see, this is 16,411. So when I say 500 points, expect the close to be above 600, 15,859. So if it reaches 15,859 and then tries to bounce back, then in that case we can go long for the rest of the week. Okay. Now the same thing if you see on the monthly chart, because in order to get a full view of the monthly chart, let us say, see monthly chart illustrate 1170, and add another 20% or so. So maybe 1,400 to 1,500 points possibility. So 1,400 points this particular month, it is 17,132. So this particular month, 17,132 minus 1,135 if it takes. So this month, the oversold condition for this month will come only below 15,900. The oversold conditions can come around 15,900. So we have got a good amount of downside potential still left of around 300 points or so for this month, I would say. Before we can look towards on the long side, temporarily at least. Okay, so these are all ways of identifying, estimating, and then probably fine-tuning your trading. Now then you may feel that why when we say 16,004, how do you position yourself? Now daily chart you go. Now this is the low, right? So 16,197. So if it starts to cut 16,197, then you can probably look towards doing this particular week slide towards 15,800, 900. Okay, till such time it reverses above 16,400. Only if it starts reversing above 16,400, then in that case we can look towards, because see one thing is that let us look at the 23 point Fibonacci also will help you. Now let us say this 23.4% comes to 16,606. So mostly we may have a lot of resistance closer to 16,606. So not that easy to get even that particular point of 16,606. So if it goes only above 16,404, then in that case we can say that probably it will end up with going up to 16,606, because that would have satisfied another 500 to 600 points movement on the upside. Okay, so now we'll keep that 404 as an important place, and a break above 404 will put around 600, 650 to 700, probably even it can come to 800 points also, because then it will come to 650 points. It is okay. So 404 has to be broken for it to move above 16,600, heading towards 16,800. If it is going to cut today's low, then probably we may be heading towards 15,800 or 900. There only the oversold condition will come. So this is the way you base your trading strategy using VIX and the ATR, and there are multiple applications we need to show you along with Fibonacci. So we will illustrate again this its application in commodities as well, and also in stocks. Okay, and then how do you fine tune your trading using the oversold conditions based on the VIX or the ATR, and also the estimation that probably we may have on this trading aspect using the using Fibonacci. Okay, so this is what it is today, and general view is that tomorrow since we have let's look at the hourly chart. and this has broken this particular low, which means this is becoming a important high. 16,404 is becoming an important high, right? So we need to keep 16,404 as an important high. And in the case of bank nifty, looking slightly better compared to nifty. So this high being broken, so I think probably it can hold up to this. So 34,165 can hold because it is now gone above this particular this one. So it has gone above this high. So higher highs, higher lows means on an hourly chart we should keep this particular place intact. Okay. This is probably you can use all these things even in an hourly chart. See, in the case of in an hour, to know whether it is an oversold or overbought, generally speaking. So let us say this is around 308 points, right? So 308 points. So hourly chart, if it is 34,347 minus 300, so 34,307, 34,037, 34,000. There should be 347 minus 300. Okay, so 34,307 minus 300. Chances that it can go up to 34,007 next hour. So 34,096. It could, if it had come there early part of that hour, then any bounce we could have bought it for that particular hour also. So similarly we can look at see this particular this one, 34,696. So 34,000 this particular close should be around 396. Now it is 418 or so. So we have to see whether it is if it is going to emerge from this particular this one. Suppose if it starts to break again this particular hour, whatever high that comes in the particular hour next tomorrow, then that should become a important pivot point for us to go long and keep the stop loss. So this is where we stand today. And so if you have any questions on VIX and how do we use this for intraday trading, you are welcome to ask now. Thank you. So thanks for your participation. We'll see you again next week. Thank you very much.